Hello, everyone. Welcome to another episode of Tooways to Skin a Cat and our first interview for 2023. It's a show where we talk career experiences, entrepreneurship, and investments. The main aim is to show that there's more than one way to be successful other than just climbing the corporate ladder. We are live on LinkedIn and YouTube, and the show will be available on podcast by tomorrow morning. So don't forget to like, subscribe, and click on that notification bell to get automatically notified when the next episode comes out. If you're joining us live, drop a one in the comments so that we know we're not talking to ourselves. And if you're watching the recording, drop a two in the comments. My guest for this week is Aron Samuels, financial planner and coach who focuses on helping young professionals make financial decisions. He's a financial coach and a financial advisor. Aron, thanks so much for joining me today.
Thank you very much. I didn't realize I'm the first guest for the year, so what a privilege. Good to be here.
Let's jump in. Tell us your story. Where do you come from? And even outside of work, who is Aron Samuels?
Cool. So my story starts in a small town where I grew up. Most of you will hopefully be familiar with Oudtshoorn, so that's where I grew up. And later in life, family relocated to Stellenbosch, and yeah, I've been around Stellenbosch and the northern suburbs ever since then. Studying UWC, my undergrad and postgrad at University of Stellenbosch. And yeah, I'm an only child, and I've always been interested in money and in entrepreneurship in business. So I found my way to financial planning through my studies, and yeah, now they can't get rid of me. So yeah.
And outside of work?
Outside of work, I keep myself out of trouble. I'm a big soccer fan. So I take my joy in some football, and also my analytical side loves a bit of fantasy football as well. So yeah, that's how I keep myself out of trouble with friends and family.
I like it. I like it. But let's talk about why we're
Mm,
here. So let's talk
mm,
financial planning. Give us a
yeah.
brief. Can you give us a brief explanation of what it covers, especially in relation to a professional?
Yeah, so I mean, financial planning is a very broad term, so it does need some explaining and some narrowing down. But basically, financial planning broadly looks at two components. It looks at your current self, who you are here today, February 2023, and it also looks at your future self. And it largely speaks to that the relationship between the two when it comes to your money. What is your current situation like now? What's your future self doing? What's your current self doing? And what would you like your future self to do? And what do you need to start doing now to create that future picture you want for yourself? So, broadly speaking, that's what it's about. It's about planning for the type of life you'd want in, not necessarily making yourself miserable now to live a better life in future, but maintaining that balance. And yeah, it's about realizing that the sacrifices needs to be made somewhere along our timeline, be it in our career or our life. Um, and usually the wise thing to do is to tighten the belt, sacrifice when you're in your 20s, your 30s, your 40s, because then you know you won't have to do it in your 60s, 70s, or 80s. So if you have to eat crackers and 2-minute noodles, rather do it in your 20s than do it when you're 70 years old. But either way, yeah, we need sacrifice. And the way that our lives are going, biologically speaking, in terms of life expectancy, the way that our careers look, it's a lot different than it was 30 or 40 years ago. Um, 20, 30, 40 years ago, we would typically work for one company and we'd have a pension fund, we'd have insurance to work, and you'd be there for 30 or 40 years. And one day they ring the bell, you shake a hand, and you live for the next 20, 25 years of a pension fund, and everything's okay. The reality now is that our retirement doesn't come towards the third quarter of our life. You can almost see retirement coming a lot closer to the halfway point of our life. We're living longer and we're not working as long. There's much more time that needs to be provided for after work. You only have so many working years to provide for the almost want to say the second half of your life, which is definitely the more expensive half. So the money needs to come from somewhere.
No,
Yeah.
that's a good explanation. And I had a little bit of, and especially people who come from a background where they don't come from a wealthy background,
Mm,
don't know
mm,
much about financial planning or
mm,
financial planners and
mm.
how to choose one.
Yeah.
Sometimes we seem to find these financial advisors who seem to just want to sell policies, and that
Mm,
can give the
mm,
industry a bad name. What should
mm,
a professional or someone watching this look
mm.
for in a financial planner or a financial advisor?
Yeah, that's a good question. Um, yeah, you're talking about advisor when I sell policies. We call them police mouse because they're around every corner. They're just looking to try and smell something to you. Yeah, unfortunately, that type of behavior, that type of approach has given the industry a bad name. And I mean, money can be an intimidating thing to talk about. And the fact that there's that perception or stigma around the industry just doesn't do us any favors, because it puts people off. People actually need to access information and help. To answer your question, what to look for, I would say one of the first things I'd consider is to know if the person is an independent financial advisor or financial planner, or if they are a tied agent or tied advisor. So the difference basically is a tied agent or advisor is someone who works for a specific, usually an insurance company. So they work for company X and they have access to company X's solutions, be it policies or investments. They are limited and restricted to one company's product, so to speak. That could be a tied advisor. On the other hand, you have an independent advisor who doesn't specifically work for an insurance company. It's usually a private firm that they work with, but they are contracted and have agreements with all the major providers. What that allows them to do is to give you options. It allows them to compare. It allows them to work with only the best companies because they are not pigeonholed into only working with one company. So make sure that you know whether your advisor is tied or independent. And my preference, my recommendation would always be to speak to someone who's independent. Um, Tying to the first point is also, and it's something that might be weird to ask, but it's actually legally required for an advisor to declare, is it's important to know how your advisor planner is paid. How does the remuneration work? Are you paying them an hourly rate? Is it a retainer? Do they receive a salary? Do they work for commission? Do they work for commission only? It's important to know that because yeah, money is one of the biggest motivators in the world. So how someone is remunerated or paid influences how they interact. So knowing how your advisor is remunerated is important. Then on another level, it's just making sure that you get a sense that this person you're speaking to is knowledgeable. Yes, they'll know more than you most likely because that's what they do for a living. But we all have that sense where you can tell with after 10, 15 minutes, does this person know what they're talking about, plainly put. And then also making sure that you get the impression that this person actually has your best interest at heart. Um, and also then knowing what their actual value proposition or offering is. Is it going to be a first meeting, a second meeting, and you sign some stuff in the second meeting and I'll see you next year? Or what is the offering? Um, is it just setting you up and you're on your own, or is there quarterly feedback? Is there annual feedback? Is there an annual meeting? Is there just an annual email? What is the offering? And are you comfortable with that offering? Um, yeah, that's about three, four, 5 points I'd say
Oh,
is most important. Yeah.
adds a lot of value. For the audience, we'll be responding to questions towards the end. So please add your questions to the comment section now so that we make sure we don't miss them. I mean, you deal with professionals a lot, especially young professionals. What financial planning mistakes do you see young professionals keep making or making most often?
Not planning is the first mistake. Um, yeah, so look, we all have different contexts and different backgrounds, different upbringings. Um, some of our parents are more clued up than others. Some of our parents are more well off than others. So I think that's where the first difference comes in, where you can see typically see who comes from a household where this type of thing was spoken about in the house, where there was guidance from a parent or an uncle or an aunt or an older sibling. So yeah, we definitely don't all start um, on the same line when we start our financial planning journey. So I think one of the first mistakes I see is people who don't make an effort to become more familiar with just basic financial concepts, basic things that's relevant to them. Not speaking to someone, not reading up, not watching a few YouTube videos, just getting a basic clue of how things work. I often speak to professionals who are in the second or third year of work, and you ask them about their gross income and versus the net income, which you're trying to figure out how much tax they pay, and they're like, "No, I haven't opened my pay slip in a year." Like that's it's the kind of thing it seems small, but if you're the type of person who would check your pay slip every month, you'd see how much tax you're paying. You'd know whether you have a pension fund deduction at work or not. You'll know whether there's a subsidy or benefit with regards to medical aid. So just what want to say, showing a bit of interest and just a bit of enthusiasm about your own financial life. There's two things, two universal things that I believe that whether you care about them or not, they're always going to be there, and it's your money and it's your health. You don't need to be a health expert, you don't need to be a money expert, but health and money is always going to influence you and impact your life. You can just as well invest some time and some effort into getting a good understanding. So I would say that's the first thing, is just not taking proactive steps to become educated, because I mean the info is everywhere. Um, Another common thing I just see is we don't know where our money is going. So we wonder where our money went. That's a consequence of not telling your money where to go. So that's one of the first things I tell, especially younger clients when I start working with them, is where's your money going? Track your expenses before you come through with your Excel and your budgeting app and your this and your that. First, know where your money is going. We need to establish what the status quo is. How much are you spending on what every month? Once you start tracking that and recording it and actually putting it on paper, putting it on the screen, that's usually enough to give you a big enough fright to actually start doing about something about it. Then start looking at budgeting and making sure you're managing things well, because we can't live month to month for the rest of our lives. So yeah, just educate yourself a bit, speak to people, do a bit of research, and then know where your money is going. Yeah, that's something I see people not doing. And I think just by starting to do that, you're really putting yourself on a much better track.
That one statement is going to stick with me. Health and money will always influence your life, so take control of it. I'm
Yeah,
going to
that's
remember that one.
whether we like it or not.
Tell me, when is a good time to start seeing a financial planner? Is there a salary level or an asset level that I have to reach first before I come and talk to you, or when is a good time, or when is the right time?
Yeah, so I I deal with a quite a vast mix of people, and I mean I have parents who are clients, and their children would graduate in December, and the mother would book the appointment for January with the financial planner, and the child knows that's what we do. That's how this works. And I'm a believer in that. So I would say when that first paycheck hits, that's when you need to see someone. Um, yeah, it's really powerful because you need to start allocating your income, and that's usually where one would need help. The earlier you start, especially if it's your first job, the better, because you can't miss something that you didn't have. If you go 3 months or a year or 6 months and then you start to see someone, you're living on your full salary. Your lifestyle moves up very quickly. So your lifestyle fits 100% on to your income level. Now, 6 months or a year later, you talk to someone like me and you realize, well, you need to start saving. You need to start putting away 10% of your money, for example. All of a sudden, what does that now require? It requires a lifestyle downgrade because there's now 10% less money to spend every month. But I'm used to living there. Now I need to take a step back. And that's the most difficult thing to do. Allocating that money is a debit order. It's three buttons on your phone, the money will go off. But adjusting your lifestyle, that's the most difficult thing. That's a year later. Imagine it's 12 years later, you've been living here. Everything's fine. All of a sudden you realize, well, I now need to save a chunk of my money if I want to be able to retire. You have lifestyle has to take a few steps back, and not many people can do that. Requires a lot of humility. Um, because yeah, we are social beings. When there's family involved, there's kids involved. It's not as simple. So while it's simpler, not necessarily easier, but simpler, get started as soon as you're earning that first paycheck. Yes, some advisors or planners will have criteria in terms of clients that they work with. Some advisors would only work with retirees, for example, or they would have internal requirements within their firm. But generally speaking, you shouldn't. I want to think that you would struggle to find someone who can assist you. So usually, planners are keen to work with younger people because they can grow with them and help them grow their wealth over time.
Where were you when I needed this advice when I started working? Like,
That's why I'm putting my voice and my face everywhere now so people can hear this.
I see that. I see that. Are there any tools out there that professionals can use that will help them with their financial planning? Maybe before they come to a financial planner, or even while they busy with a financial plan.
Mm. I think just on a basic level, some sort of um, tracking or budgeting app or website would that's handy. I know 22/7 is quite popular. I actually heard earlier today from a colleague, it's one of the banks that has spending tracking capabilities within the banking app. That's something to look at. And then another, not call it a tool, but another piece of information that's also very important is your credit score. So using one of the free sites, um, become familiar with how a credit score fits together, what makes up a credit score, and then start to track your own. Yeah, I'd say that's good to start with, and then it's always interesting to play around with some of these online calculators and see if you save this much per month over 10 years out of that much, just to get a bit of an idea and to get a bit of a lay of the land, and also to get your expectations in line of what you can expect in future. Yeah, so just a budgeting app, looking at your credit score, and then yeah, play around with a bit of investment tools, some of the tax tools online. Be yourself how much tax you'll be paying now and in future. Yeah.
A lot of
Mm,
say financial professionals say,
mm,
I can do my investing myself.
mm,
I know what's good for me. How do you
mm.
respond to them?
Yeah, I think that's like it's like being your own doctor. Um, yeah, my response to that will be is that financial planning is about more than just the numbers. If it was just about the numbers, then our engineers and our actuaries and our CAs would be the wealthiest people. They don't do too bad, but they aren't the wealthiest and most financially successful out there. There's more to financial planning than just the numbers. We don't see our own shadows and we don't always know what our blind spots are. The behavioral component of financial planning is the most important thing. Um, Investor behavior gives you your returns, not investment performance. Because if you're invested in a fund or in a share or in an ETF, it's done 20% over 3 years. That's not necessarily your return. Your behavior will determine how much of that return you got as well. Because within that 3 years, the fund took a 10% dip. And at that stage, you took your money out. When it recovered, you missed the recovery. Um, again, you can be invested in the correct fund, but staying invested is a different story. That's what you often need help with. That's a big part of what the financial planner does, is getting the client to understand and getting them to be committed to actually staying put. Sometimes the best thing to do and most important thing to do is to do nothing. Now you convince yourself to do nothing. You can have a tough time. There needs to be, I was going to say, a voice of reason. Um, yeah, we need help, not necessarily with the numbers. Like I said, you can do all your own calculations and projections and get your asset allocation right and all of that. At the end of the day, you're still a human being. And when it comes to our own money, that's when we're the most I was want to say most dodgy, because we don't treat our own money the way we treat our clients' money. Because I'd sit in a meeting and tell a client, listen, I think you should just stick it out. We knew this was coming. It's the right thing to do. And later that evening, I'm moving my own investments around. Yeah, it's sometimes it's difficult to follow your own advice. So get someone else's advice. There's more to it than just knowing how much to invest and where to invest. If it was that simple, we'd all be rich and we'd all be able to retire in luxury.
I have one or two more questions, but I see there's some questions coming through from the audience, so I rather want to jump through there.
Sure.
We've got a question from Patiswa, who says, do you think teaching third-year graduates from tertiary institutions will help? I'm assuming she means how to plan financially plan.
Yes, yes. Definitely. Look, ideally, you'd wanted to start even earlier. Yeah, I've worked for a company that does a lot of work for students, and I literally worked on on campus, doing money workshops for students. And yeah, I must say the amount of interest that we saw in that. I mean, I would usually have run a session over lunchtime and then one at about 5:30 or 6 p.m. on campus. And the amount of first year students that would pitch up during lunchtime to listen to me talk about money and budgeting was, I always used to laugh at them. I'm like, what are you doing here? When I was a first year student, it's the last place I would be. So that just shows that there's a keen interest. So definitely, incorporating, whether it's formally as part of a curriculum in schools, but yeah, just making it available. I know there's a lot of societies on the campuses, that do work on that, but yeah, it will definitely help you. Because then you're not coming into the working world with a blank canvas. You at least have a bit of context and a bit of background. Yeah,
Thanks for that great question, Patiswa. And we've got a question from
yeah.
Sergio, who says, which budgeting app is easy to use and syncs across apps, or one that's a shared app between spouses?
Cheat between spouses might be dangerous. I'm not sure about functionality to share between people, but Sergio, the one I'm familiar with is 22/7, and I know that syncs into your bank accounts and it syncs into your investment account. I know specifically Easy Equities. Um, so every day it would, about 10, 11 in the morning, it would refresh and pull through the updated numbers. And then, like I said, I think it's Discovery, when their app has functionality as well. But I know, I think FMB as well. So if you're not using your native banking app, then 22/7 is one that I'm familiar with. And if you want to be a bit more old school, it's not as convenient in a good old spreadsheet does the trick as well. Just a bit more effort to keep it updated, every day or every week. But yeah, it's about finding what works for you, and what you can be consistent with. It's Yeah, people always ask me what's the best that or what's the best that. I often say it's what's best for you. You just need to do the thing that's gonna work. It can be the super cool app that does all these things, but if you're not gonna stick to it, then yeah, then it's of little value.
I love my spreadsheets with my VLOOKUPs. That
You
that's
see,
just me.
you are that Excel warriors is what I call you.
uh,
Hmm.
this is a question I like to ask all my guests. What is one piece of advice you would give your younger self?
Sure. That advice would apply in life in general, and it strongly relates to money as well. But it would just be to just focus on yourself and block out the noise. Um, that from a just like I said, from a life standpoint, is probably the healthiest thing one can do, and also from a money standpoint, because pressure, social comparison, caring what people think, whether it's in general when it comes to money, can often be your downfall. Having that confidence in who you are and not attaching too much value to the materialistic, that can set you on your way. These I mentioned earlier, lifestyles having to go up and down, and a lot of the time we know the right thing to do is you need to sell that car, you need to downgrade that car, you need to find a cheaper apartment, you need to start buying clothes at a different store. Um, it's the right thing to do. It's what you need to do in your life. But this thing over here doesn't allow you to do it for various reasons. So yeah, if we can get control over here, that it changes your money life, and in turn it changes your whole life. So yeah, to summarize, focus on yourself, block out the noise. People are always going to have something to say. So yeah.
Good advice. Any last few words from you or anything we didn't discuss that you'd like the audience to know?
Oh, I'd say just absorb and learn as much as you can. I'm a lifelong learner, so listen to different perspectives. There's a phenomenon known as confirmation bias, and once we've decided something is true, we only consume things that agree with what we decided is true. If we decided something's true, we only associate and talk and share with people who believe the same way we do. Talk to different people, read from different sources. Be careful to be pigeonholed into a way of thinking about things, especially when it comes to money. People, there's a lot of sentiment when it comes to money, and oh, South Africa is going to the mud. You need to be offshore. Taxes this, taxes that. Oh, the government's going to take your pension. Oh, all kinds of sentiment. Um, do your own research. Speak to a variety of people. Um, Make up your own mind based on what you've seen, what you've read, and what you've experienced. Don't blindly latch onto other people's ideas, which we can sometimes do. Yeah, that's about it from us. Time went really quickly.
Do your own research. That's a good way to end. The show
Mm,
has been
mm.
live on YouTube and should be available on podcast by latest tomorrow. If you're watching on YouTube or listening on the podcast and you feel that it's added value, don't forget to like, subscribe, and click on the notification bell to get automatically notified when the next episode comes out. Aaron, thank you so much for your time.
Thank you, sir.
Thanks
It's
everyone
been
for joining
great.
us for another episode of Two Ways to Skin a Cat. Goodbye.